Good day, Junior Tikkies. I'm Mrs. Brimacombe. We're going to look now at Chapter 1, Activity 3. You are provided with the information relating to sparkling traders. The business uses a fixed markup percentage of 50% on cost. Required: record the transactions in the cash receipts journal and the cash payment journal of sparkling traders for February 2024. Question number 2. Record the following transactions on the accounting equation: day 2, 5, 7, 20, and 27. So it's not required to do all of them, only some of it. So this is the first activity where we're going to look at the journals. I'm going to start by first looking at the cash receipts journal, and then we'll move on to the cash payment journal. When you approach an activity like this, you can look at the transaction and take it immediately to the journal where it's supposed to go. So it doesn't matter, we at the end of the activity will get to the same result, and that is by completing the cash receipts journal and the cash payment journal. Day 2, the owner, Blue, increased his capital from 25,000 to 50,000. The money was deposited directly into the bank account of the business. So when we start with the cash receipts journal, we start with the document, bank statement. On day 2, from who did we receive the money? From Blue. How much did we receive? And this is where you need to be careful. He increased his capital from 25,000 to 50,000. So the difference is equal to 25,000. It goes directly into bank because the money was deposited into our bank account. Day 5, received 6,500 cash from HM Boston in respect for rent for February and March. Issued receipt number 1. So the source document applicable would always be duplicate receipt number 1. Why duplicate? Because the business keeps the duplicate, the customer will get the original. How much did we receive? 6,500. For what reason? For rent income. Don't get caught out with this. They said to you received 6,500 in respect for rent for February and March. So don't times this by 2. We've received a total of 6,500. Then on the same day, cash sales according to the cash register roll, 9,651. We don't have to write the date again, but the source document is cash register roll. Details will always be sales. Analysis of receipts, 9,651. Why did we receive the money? Because of sales. And now we need to calculate our cost using the markup percentage of 50%. So calculating the cost, take the selling price times 100 divided by 150. At the end of the day, draw a line under analysis of receipt and add those two together, and that is the total that should appear under bank, 16,151. Day 12, cash sales according to cash register roll, 7,800. Source document, cash register roll, day 12, sales, analysis of receipts, 7,800. Why did we receive the money? Because of sales. To calculate the cost, take the selling price times 100 divided by 150. That was the only transaction on day 12. Draw a line. 7,800 is deposited into your bank. Day 20, cash sales as per cash register roll, 8,760. Source document, cash register roll, day 20. Details, sales, analysis of receipts, 8,760. Sales, 8,760. And to calculate the cost, take the selling price times 100 divided by 150. This was the only transaction on day 20. Remember then to close off the analysis by drawing a line. How much did we deposit in our bank account? 8,716. Day 25. Cash sales according to the cash register roll, 10,350. So this is my main income in a in a trading business, is by selling goods. So again, we start with the document, cash register roll, day 25, sales, analysis of receipts, 10,350, sales, 10,350, and cost of sales, 6,900. It was the only transaction on day 25. Draw a line and write the same amount under bank. Day 28. The bank statement received from AB Bank reflected the following. Interest on credit balance, 145. We start with the source document, bank statement. On day 28, the name of the bank, AB Bank. In my bank, how much did we receive? 145. For what reason? Interest on current account. You have to make sure that you understand a bank statement. Credit means positive for us. It means that the business has a favorable bank balance and we've received interest on that favorable bank balance. Debit means negative. So if you ever see it says interest on debit balance, that means that it is interest that we had to pay because we had a bank overdraft. So this is important to remember. On day 29, sold goods as per cash register roll, 15,000, subject to a 20% discount. So now it becomes a little bit more challenging. The source document, these are the easy part, is cash register roll. On day 29, sales, but now there's a calculation. This is subject to 20% discount. So discount was given to customers. So how much did the customers pay? Take 15,000 times 80%, or you could have said 15,000 times 20%, but then you still need to subtract that from the 15,000. When you're calculating the cost, it is always calculated on the original selling price, and that is key to remember. So, analysis of receipts, 12,000. This is the amount after the discount was given. Sales, 12,000. Cost of sales, 10,000. It's the only transaction on day 29. Draw a line, and the same amount will appear under bank. Once we've taken all the transactions from the cash receipts journal to the cash receipts journal, we can draw a line and we can total bank, sales, cost of sales, and sundry accounts. Please take note, from the cash receipts journal, bank is going to be debited, the rest is credited except for cost of sales. Cost of sales is a non-cash item. It's a debit entry. When you see the word cost of sale, their BFF is trading stock. So to see if we've added this correctly, if you take sales plus sundry accounts, it should equal exactly the same amount. Completing the cash payment journal. So again, we've sorted out all the transactions. We've taken all the transactions that has to go to the cash receipts journal. Now we're going to look at everything that has to go to the cash payment journal. The first transaction is on day 7. Drew 2,000 cash from the ATM to pay the weekly wages. Source document, ATM. Day 7, cash, bank 2,000, wages 2,000. Day 8, purchase goods from Blue Wholesalers and paid by EFT to 18,000. So my source document is EFT number 2 on day 8. Who did we pay? Blue Wholesalers. How much did we pay? 18,000. And very important, we don't show this as goods. When we say we've purchased goods, it's recorded as trading stock. Merchandise, goods is all recorded as trading stock. Day 12, purchased the following from E&A Stationers and paid by EFT, a printer and A4 printing paper. So here you need to be careful. We start with the source document EFT number 3. This happened on day 12. Who did we purchase from? E&A Stationers. But now I'm going to start with what did we purchase. So the A4 printing paper would go under stationery. The printer would form part of my equipment. In total, we've paid 3,712. Day 14, drew 2,000 cash from the ATM to pay the weekly wages. My source document, ATM, is actually ATM slip. Which day? Day 14, details, cash. How much did we draw? 2,000. For what reason? For wages. On day 20, bought trading stock from PP Traders 6,200 subject to a 10% discount and paid by EFT. So a reminder, trade discount means paid less on items purchased. So trade discount can be given to our customers and trade discount can also be received. So when we bought trading stock from PP Traders for 6,200, this was subject to a 10% discount. So we need to find out, but how much should we pay after the discount? And to calculate that, 100 minus 10 means that we've only paid 90% of that outstanding amount. You could have also said 6,200 times 10%, but then you still need to subtract that 10% from the 6,200. So when we complete the transaction in our journal, this happened on day 20. Source document, EFT, now it's number 4. From who did we purchase? PP Traders. How much did we purchase for? 5,580. For what reason? For trading stock. On the same day, purchased stationery from Stationery Hub, 1,470, and made an online payment. So when I'm making an online payment, my source document is bank statement. Who did we purchase from? Stationery Hub. How much? 1,470. For what reason? For stationery. There should always be 2 entries because we're following a double entry principle. The next transaction on day 21, drew cash from the ATM for the following: wages 2,000 and the owner's personal use 300. So we start with the source document. On day 21, cash. For what reason did we draw money? For wages 2,000, and anything that the owner takes for personal use will be shown as drawings. So in total, 2,300 was taken from the bank account to pay for the wages and for personal use. Day 27, paid the water and electricity account to City Tshwane by EFT 4,400. On the same day, bought merchandise from Flower Traders 25,300 and made an online payment. So the first transaction that we're going to enter on day 27, the source document is EFT number 5. Who did we pay? City of Tshwane. How much? 4,400. For what reason? Water and electricity. You don't need to write the date again. The source document will be bank statement. Who did we pay? Flower Traders. How much did we pay? 25,300. For what reason? Merchandise is shown as trading stock. Now, a common mistake, we go and we write this under sundry accounts as merchandise, and then we get it completely wrong. Merchandise is your trading stock. If I say to you goods were purchased, that is part of trading stock. On day 28, the bank statement received from AB Bank reflected the following. Bank charges, 195. So we start with, who did we pay? AB Bank, 195. For what reason? For bank charges. Then there was a debit order to Telkom to pay the telephone account 3,200. This includes the owner's personal telephone account of 800. So now you can't write AB Bank again. On the bank statement received from AB Bank on the 28th, we made a payment by debit order to Telkom for 3,200. This was because of 800 for the owner's personal use, which is shown as drawings, and the difference was the business expense for the telephone. Drew cash from the ATM to pay the weekly wages on the same day, day 28. Details cash, bank 1,700, wages 1,700. If we are done with all the transactions, the next step is to draw a line and to add each column. Now a reminder from the CPJ, bank will always be credited and the rest will be debited. So if I take trading stock plus wages plus stationery plus sundry accounts, it must equal the bank total. If it doesn't, it means somewhere you've made a mistake. Completing the last question, the counting equation. So again, this is for you to see the transactions are taken to different platforms. You can take the transactions to the journals, or I can ask you to complete the counting equation. So on day 2, the owner increased his capital from 25,000 to 50,000. The money was deposited directly into the bank account of the business. If the business receives money, then bank will always be debited, account credited, capital, assets, and owner's equity plus 25,000, and nothing happened with your liabilities. On day 5, received 6,500 cash from HM Boston in respect of rent for February and March. If the business receives money, bank is debited, account credited, rent income, assets plus owner's equity plus. Because rent income is an income that increases, it will have a positive effect on my owner's equity. On the same day, cash sales according to cash register roll. Now, remember, there's 2 entries. Why? Number 1, we need to show the selling price. Number 2, we need to show the cost. To show the selling price, bank is debited, account credited, sales. Assets plus owner's equity plus. To show the cost, cost of sales is debited, trading stock is credited. Remember, how do we calculate the cost? Take the selling price times 100 divided by 150. Cost of sales is regarded as an expense, which will negatively affect the owner's equity. Trading stock is regarded as an asset. As soon as we sell our trading stock, our assets will decrease. On day 7, drew 2,000 cash from the ATM to pay the weekly wages. When money is taken from the business bank account, bank will always be credited, account debited, wages. Assets minus, owner's equity minus. Day 20, there's a few transactions that happened on day 20. The first one, Bought trading stock from PP Traders, 6,200. This was subject to 10% discount. Go back to the earlier calculation. How do we calculate the amount after discount? Take 6,200 times 90%. So when we're buying, it means bank is credited, account debited, trading stock. Both is classified as a current asset, and that's why our assets will be plus minus. Nothing with owner's equity, nothing with liabilities. On the same day, purchase stationery from Stationery Hub, 1,470. Bank is credited, account debited, stationery, minus 1,470, minus 1,470. On the same day, cash sales as per cash register roll. A reminder, I need to show number 1, the selling price, and number 2, the cost. To show the selling price with a cash transaction, bank will always be debited, account credited, sales. Assets plus, owner's equity plus. To show the cost of sales is debited, trading stock is credited. Our assets will decrease because we sold the goods. Our expenses will increase, which will have a negative effect on the owner's equity. On day 27, paid water and electricity account to City of Tshwane by EFT, 4,400. From the CPJ, if a payment is made, bank is credited, account debited, water and electricity. Assets minus, owner's equity minus. A reminder, as soon as your expenses increase on the debit side, it will have a negative effect on the owner's equity. On the same day, bought merchandise for 25,300 and made an online payment. What did we purchase? Merchandise is shown as trading stock. This means that trading stock will be debited, account credited, bank. Both is regarded as a current asset, plus minus 25,300. Nothing happened with your owner's equity. Nothing will happen with your liabilities. Thank you very much. I want to leave you with this quote. If you are not willing to learn, no one can help you. If you are determined to learn, no one can stop you. Have a wonderful day.